Okay. Hi, hello everyone. Welcome to the StartEngine registered ICO seminar. Are we online? No? Okay, we're here? All right, I'm being told we are here. So thank you all for being here. I'm going to introduce myself. I am Kinsey Cronin. I'm Director of Business Development here at StartEngine, which is an equity crowdfunding platform based out of LA. I have been working with Jobs Act regulations for almost 2 years, which is actually longer than some of them have been in effect. They're very new set of laws that allow you to regulate the way, or they allow the SEC to regulate the way that capital is raised online. And we have launched over 100 companies or 100 raises and raised more than $40 million here at StartEngine. So I've personally been involved with at least 30 or 40 of those in a very close way. So I'm really excited to be discussing with you today the regulated ICO process, which we are feeling really, really good about. Very excited to take this innovative ICO process and join it together with the regulation so that this amazing innovation is no longer going to be a personal liability, security, legal risk for the people who are raising capital through this process. So let's see, it looks like we should get started. Here we go. Okay, so StartEngine, it's our mission to help entrepreneurs achieve their dreams. Again, we are an equity crowdfunding platform based out of LA. And I'm going to go through a quick history here of what online public offerings are under the Jobs Act and what's been going on with them, because I know for some of you this is going to be a little bit new, especially if you're primarily in the crypto space and not in the regulated raise space. So in 2012, Obama signed the Jobs Act, which is the Jumpstart Our Business Startups Act, and it was designed to make it easier for companies to raise capital and to function so that there was more opportunity for smaller businesses. And one of the main things that it did that we focus on is Titles 2, 3, and 4, which allow for companies to have more access to investors, and it allows for more investors to be eligible to invest in companies. So there are a few parts within the regulations that only allow for accredited investors, but in other areas you can actually raise money from anybody. We'll get a little more into that. So by February of 2016, our very first large OPO, large online public offering, had launched and raised nearly $17 million. Is a three-wheel car maker, Elio Motors, and they launched with StartEngine. And then in May of 2016, a few months later, the kind of new version of the same regulation that allows for a small OPO came into effect, which meant that companies were allowed to raise up to $1 million with a very low barrier to entry. So we primarily work with small OPOs and large OPOs, and also something we call select OPOs, which we will be getting into in just a minute. And I'd just like to remind you guys that you can all ask questions in the comment section. We'd love to answer your direct questions as we go through this. I'm going to go through this entire explanation and presentation, and then at the end we'll be answering all of your questions. So here we are at today, where by today over $1 billion has been raised under the Jobs Act, and it's growing very, very fast at 20% per month. And at StartEngine, we are participating in that, and we've been seeing that same kind of growth. I'm really excited to be making these complicated, sometimes complicated laws usable and easy and really fun. So you've seen the standard OPO history. Now let's look a little bit into ICO history for those of you that are not already familiar with this stuff. So back in 2009, Bitcoin was first introduced as an online cryptocurrency. And in 2014, you see your first initial coin offering, which raised $18 million, and that's Ethereum, which we all know. By May of 2016, we saw our first failed ICO. This is really important because this is when SEC starts really paying attention and where the legal and personal liability dangers start showing up, and people start getting a little nervous because in the case of DAO, $50 million that was contributed vanishes. And then in September, just last month, you see the very first Jobs Act regulated ICO with Filecoin, which raised over $200 million with a Regulation D 506C offering. So we're going to join those two together. So what exactly is a regulated ICO? It's an ICO that works together with the laws, and we think of this as the 2.0. So there was kind of the Wild West of ICOs, and because nobody really wants to make that risk of breaking the laws in order to do their ICO, we're helping you regulate them. The laws are in place to regulate them. So before regulation, what we're looking at is an unlimited amount of raises, no regulation. You don't have to worry about Bank Secrecy Act and know your customer checks. There are no financial disclosures or real accountability, which makes it really easy and exciting. But those smart contracts are hackable, and because there's no record of who's buying or selling, and so tokens can just completely disappear. And most importantly, there are these heavy legal liability risks with the Justice Department, and we see people are going to jail or potentially getting life sentences for the work that they're doing because they're completely unlimited and there's no precedent. So it's not clear to some people who are doing these early ICOs that what they're doing is going to land them in a lot of trouble because it hasn't happened before, but that doesn't mean the SEC isn't willing to make examples of people. So after the regulation, you're going to see it's a little bit more difficult, but it's a lot safer. So you can either raise an unlimited amount from accredited investors. We're going to go through what accredited investors are, or you can raise up to $50 million from anybody, and that's going to depend on what kind of regulation you want to use. You're either going to register with the SEC or use an exemption. You will have to do the Bank Secrecy Act. You will have to know your customer. But there's some benefit in that a transfer agent who is going to hold that information on securities is going to make it a lot easier to maintain ownership and create a pathway for returning any hacked tokens. And you are going to need to follow the law, which does require financial and ownership disclosures, so that the investors are there's going to be a certain level of information that you're going to have to provide so that the investors are definitely aware of that before they invest. And the entire thing is going to be supervised by the SEC. The great thing about that is if they're supervising you beforehand and you're following the law, you've got a much lower risk of ending up in front of them later in court and getting sent to jail. So the specific Jobs Act rules that we want to talk about today are Reg D, 506C, and Reg A+, and I've already mentioned them. The Reg D is limited to accredited investors, and what that means is that everybody who invests in the company is going to either have $1 million in the bank, so their net worth outside of the value of their primary residence has to be at least $1 million, or they need to be earning at least $200,000 a year for 2 years if they're single, or $300,000 a year for 2 years if they are married, and that's together with their spouse. That makes somebody accredited, and that's about 4% of the US population is accredited. So it's a smaller group of people, but they do obviously have a lot of wealth. If you do a Reg D, you have unlimited raise amounts, and you don't have to provide specific financial disclosures beyond what the investors request from you. Essentially, the SEC trusts that accredited investors have more funds, are likely more sophisticated, and they are not going to come in and babysit the communication style that you have with the investors, or meddle too much in the process. You don't need their their qualification. But the really important thing to remember, features going to be sellable to other accredited investors. So under the Jobs Act, you're going to need to prove that they're going to need to be able to prove to you that they are accredited, and then in order to sell them, they're also going to need to prove that the buyer is accredited, and there's a process involved with that. Now, StartEngine does that process every day. It's definitely possible to do it. It's just going to create some limitation there, that they do have to have some clear demonstration, something signed that says that they're accredited. Over here under Reg A+, this is a little bit more similar to what a standard ICO looks like right now, where anybody can invest in it, but there's a limitation of $50 million per year that can be raised under Reg A+. I'm going to go through some of the other elements here. The SEC requires an investor prospectus and a 2-year CPA audit. So that is going to cost at least $100,000 typically to get started. And it will take 3 or 4 months for the SEC to actually qualify it. So what that means is that you're providing the investor prospectus and the audit, and you're putting the entire 1A form together. And then the SEC is looking at it, adding comments, sending it back to you, and requiring that before it becomes qualified, you address their comments. And it may go back and forth a couple of times, which is why it can take so long. The good news is that before you do this, without any kind of paperwork or financial obligation, you can actually solicit investors before the race starts under what we call a test the waters. And that means that you can do pretty much everything except take their money, including take all of their bank information, as long as you don't run anything. So at StartEngine, we are going to be running a lot of these test the waters for ICOs. Many ICOs have the pre-sale period anyway, and that's just he refers to as test the waters. And it means that you're going to talk about the raise, put together a campaign page, pitch it, tell everybody about it. They can tell you exactly how much they want to invest, and they can give you all the information. Once you have your qualification, it's as easy for them as hitting one button and the investment goes through. The cool thing about this is that the shares become tradable immediately after you close on their offering, or you close on their investment, and that means that there's a lot more liquidity available under Reg A+, because anybody can then purchase those shares. If you're thinking about how your token might be used, I know I'm using the word shares here, but token is pretty much interchangeable in this context. If you're thinking that your token might be purchased in large amounts by early investors, but then ultimately would need to be parsed out in very small numbers to anybody who might be purchasing at only a few at a time, probably going to want to think more about a Reg A+, so that these shares can be traded, or these tokens can be traded to those smaller investors. Okay, how does it work? And by the way, thank you all for the questions that are coming in. They're looking really good. We're definitely going to get to all of those at the end. Okay, offering structures. So here are the 2 different ways that we have outlined that you can actually structure your tokens. So I'm going to start with this one on the left here, issuing tokens to be later exchanged. So this is if you're intending to have a utility token as part of your business function. So what you're going to do is you're going to sell a security token. It can be for Bitcoin, Ethereum, or fiat. However, we take credit card, ACH transfers. You're going to sell your security tokens, which will ultimately only be tradable on regulated marketplaces. So these are not going to be all the same marketplaces you're used to. The new marketplaces need to be broker-dealers that have become, that have essentially registered with the SEC to allow for safe trading. But it's going to be a very similar process, and we're going to go a little deeper into that process a little bit later here. Once your service is ready, those security tokens can be exchanged for your utility tokens. There wouldn't be any dividends or exits. It's simply a security token using the simple agreement for future tokens, which you may have heard of or seen. I think CoinDesk just did an article about them yesterday that you can look up. But yeah, this simple agreement for future tokens are what you're actually selling. That's a security token. And then ultimately, they're going to be exchanged for those utility tokens. And you're going to be using either Reg A plus or Reg D for that. Now, the other offering structure over here on the right is if you're going to issue tokens that directly represent a security. So in that case, you're going to do the same thing where you're selling it and they're going to be regulated in the same ways. But the difference is that you're going to be paying dividends or possibly liquidate the securities if the company has an exit. So, and you don't have to pay dividends. It really depends on how you want to structure it. But you're going to take a security that you're interested in selling anyway, and you're going to put a token on it. You're going to use a standard security purchase agreement depending on what type of security you use, and you're going to use the same regulations. And we're going to go deeper into both of these. I just want to talk first about what we're seeing currently in the market. What have you seen as examples? To clarify, because I'm sure you guys have seen Filecoin or Science, or maybe you haven't. But right now what we're seeing is Filecoin used Regulation D and the promise of utility tokens. So again, over here on the left, over here on the left, you've got the two different types of structuring for the token. So either the promise of the utility token or the direct sale of a security token. And then up here, you've got the two different types of regulations that you would register them under, and you can mix and match how you want to. We haven't seen any filings under Regulation A+ yet, and the reason for that is because of that 3 to 4 month period during which the SEC has to qualify the raise. So there are actually a lot of companies that are building their Regulation A+ raises now. It'll be a couple of months before you see them, but we're going to see both promise of utility token and sale of a security token in that space. And then under Regulation D, which is a lot faster, you've seen Filecoin with the promise of the utility token and Science with the sale of the security token. Okay, so but going back a little deeper into those token examples, because this is really important to understand how this structure works. Back to the utility token example. This is again the Filecoin so for Filecoin specifically, they limited the number, they offered a limited number of tokens, which means that there's a potential resale marketplace, which is where they need to make sure that they're registering it because that's a hallmark of a security. The tokens, because there's a limited number, depending on the market, can increase or decrease in value. The initial tokens that are purchased, the ones that are under the SAFT, can be traded on the regulated exchanges. So when you have the security token that's going to be exchanged for the utility token in the future, once the utility token is ready, that can only be traded on a regulated exchange because it's a security. Once the utility token service is ready, so when you can actually start using those tokens to purchase file space or whatever else it is that you're going to be using, whatever else other use the token is going to have, that's when you're going to trade in your security token for the utility token. Once you have your utility token, that can be traded on any standard exchange because now it's a commodity. Checking out here the security token example. Now this is the other one. So we're still sticking with just the same two, utility token or security token. I'm just going into further detail here. So let's start with the gray box. For the security token, there are a lot of different ways that you can choose. There are a lot of different types of securities you can choose to sell in your company. So common B stock is an example, revenue share model is an example, debt offering, convertible note. Any way you can think that you might sell shares in your company, you can create a security token around that. So there's a few examples there. What you're going to do is you're going to each token is going to represent one share in whatever the new class of shares is, or maybe it's going to represent one unit. depending on how you structure that security. You're going to write your white paper explaining how the value is created for the token. So you definitely want to make sure that you're connecting this to the crypto community by writing a white paper that makes sense and helps make sense of it. The purchase agreement that's going to be signed by your investors is going to detail all the terms of the security. So now, instead of trading the security token in for a utility token, which has that commodity value, it's going to stay a security token. And there's a potential for dividends, there's a potential for liquidation. Neither of those things are required, but you guys get to structure this how you want to. So how do investors get the tokens? They'll have a wallet. So StartEngine is creating a specific wallet within StartEngine for each investor. This is going to at least start out the tokens, or it's going to be the last place the tokens are before they get invested. The investors can immediately, once those tokens have landed in their StartEngine wallet, they can transfer them anywhere they want. If they have their own hosted wallet, it's going to be compatible with pretty much anything, and anywhere that they want to be storing their other tokens, they can also store these tokens. The interesting thing here is that there who can invest if they're investing via credit card or ACH transfer, not with tokens. They might be investing essentially cash into your ICO and getting their first wallet automatically because of it, which is an interesting way to kind of move beyond just the crypto community to other types of investors who don't need to, or maybe they don't have other tokens that they want to be using, or they do, but they just would prefer to use this, prefer to use another method in this case. But now they've got a wallet and now they've got your tokens. Okay, how will the investors trade the tokens? This is really important. So StartEngine uses an Ethereum smart contract, and I'd like to focus everyone here on the graphic on the right. In the center, we have the ATS, that's the alternative trading system. So this system is similar to the exchanges that you're already seeing your tokens traded on. The difference is that it is registered, which means it's a broker-dealer that has registered with the SEC to be an alternative trading system. And this process is pretty easy. I mean, it's a lengthy process to become a broker-dealer, but when you already have broker-dealers, which are the people who are in charge of managing, and they can sell, trade, they can manage the trades of shares and purchase of shares to investors. So all they need to do is let the SEC know that they want to do an alternative trading system and apply, and now you have a secure, regulated ATS. So the seller will bring their tokens to the ATS, same way they would bring it to any exchange. And the main difference here is that if this weren't regulated, then the buyer would buy the tokens. It would be a simple exchange. There wouldn't be any kind of review. It would be very fast. It would just that would be it. But that is what can get you into a lot of trouble. What the ATS will do is go through a registered transfer agent. That's one really, really important element, which means that the transfer agent is going to be checking to make sure that the seller actually has the tokens and that the buyer is eligible to purchase the tokens. And the buyer will go through an anti-money laundering and a know your customer review so that the transfer agent can verify that the buyer has enough funds and is eligible to purchase, and also isn't on any anti-money laundering registries, which is extremely important to make sure that you don't have criminals investing in your tokens. This process, on each side, it can be instantaneous, but often there's a 2-day clearing period that these broker-dealers will have. So it might take 2 days to confirm the purchase. And we can get more into that a little bit later if there are questions about it. Okay, what does it cost? Under Reg D, StartEngine charges a $200 per investor fee. Remember that all of your investors will be accredited. There's also a charge of the equivalent of $200 in the token that is issued. And there's an additional $50 per investor verification fee to make sure that the investor is verified. There's a few other fees that are much smaller per investor in the dollars and cents. Anti-money laundering, know your customer, escrow, ACH, wires, credit cards, all have different fees associated with them. So for example, a wire, I think is typically about $10 versus an ACH, which is about $1.50 per transfer. Then if you look over here at the Reg A Plus, it's a much lower investor fee. There's a lot more investors in Reg A Plus. So it's $50 per investor, and the equivalent in the security token issued. The legal fees and auditing fees are important here. Those aren't going directly to StartEngine. We do offer a all-inclusive package, which if you're interested, I'm going to have my email at the end of this. We can talk more about it if you're interested in doing something all-inclusive. But if not, you will be responsible for your own legal and auditing fees. And then additionally, any specific notice filing fees for different states. Those are very low. It's maybe $100 here or there. And that's for specific states which have special filing processes that they want you to go through. Reg A Plus is an exemption, and generally blue sky laws do not apply, but there still are a couple minor amounts of paperwork and filing, very low filing fees that you might need to do for some of the states. Other fees that are on top of that for the Reg A Plus would be the anti-money laundering, know your customer costs, escrow, ACH, pretty much the same thing. And again, those are all very low. StartEngine Premium is another service that StartEngine offers. This is specifically focused on the creation of your campaign page and the putting together of all of your paperwork. So this is a $5,000 full service package that you can purchase. It's optional, it's not required, but we basically have all of the experts that are available to walk you through all this stuff. And in the case of your campaign page, actually create it for you. Pretty amazing group of people that can make your life much, much easier during the creation of this, especially when you're thinking about all of the more complicated structures within your ICO. So again, we can talk more about StartEngine Premium. It's just an easier and I would say a higher quality way of getting this done. And this is also really important. So we mentioned the test the waters period. So on November 10th, StartEngine is hosting the world's only regulated ICO summit. So this is specifically for ICO 2.0, when you're taking your ICO and you are regulating it, you're registering it, and you are making sure to follow these laws so that the risk is mitigated for you. We are hosting this in Santa Monica on November 10th at Shutters on the Beach, and we're going to have a lot of ICOs in the test the waters stage that will be pitching their opportunity to investors. So if you would like to come and pitch your ICO to the audience of investors, and we're going to be live streaming it. If you want to be Oh gosh, here we go. I forgot I didn't have this. Okay, so here's a little bit more information about it. You're gonna pitch in front of hundreds of investors that are in person or on live stream. And we are also doing a VIP dinner on Thursday the 9th. If you attend to present, there's no cost for your attendance for yourself and a coworker. And you also get to attend our ICO workshop prior to that. So we're basically putting together this summit with the goal of having your companies out there pitching your ICOs, explaining them, and also making sure that you're doing this legally. We're going to have former SEC lawyers in every division of the SEC there talking about where their expectations are for how the SEC is going to take this, how to do it safely. So this is definitely something that is going to have a big focus on your pitches, and also a big focus on making sure that your ICO is following all the rules and you don't end up in jail, because that's not what we want. We want to make sure that they're not only a huge success financially, but also don't cause you any trouble down the line. So if you guys want to get started, we're going to go into the question section in just a minute, but if you do want to get started, you can email me here, Kinsey@startengine.com. Because it's a YouTube live link, we actually don't have all of your email addresses. So please make sure to email me, or at the very least, write in the comments section your information. However, again, with YouTube Live, they don't save the comments. So it would really be best if you just shoot me an email to sign up for that summit. The process is pretty easy. We have two different ICO posting agreements. One's for Reg A Plus, one's for Reg D, and there's no financial obligation. There's no obligation actually to continue on and launch your Reg A Plus. We just want you to at least do a test the waters Reg A Plus in order to pitch. It's important that you have acknowledged that you want to do this in a legal, registered way in order to pitch at the ICO Summit. And then create an account on StartEngine and click Raise Capital, and you've got all the tools there available to put your whole story together to create your campaign page and start the process. So this is really easy. I think I'm going to leave this page up while we go into the Q&A section. That way you guys have this information here. So what kind of questions? All right, so the first question is, what degree of assistance do you provide for SEC applications and offering letters? So we can provide, we can completely handle it for you. We're offering that a limited amount. Only three companies are going to get an all-inclusive management of their ICOs, and that's because it's such early days. We want to walk through 3 companies through the entire process. So we have a $200,000 flat rate, which would include all fees. So there wouldn't be any additional fees to StartEngine, no per investor, nothing. And it would also cover all of your legal and your audit, which ultimately is going to be a really, really great deal. So no fees from StartEngine, no legal fees, no accounting fees. That would be if we walk you through the entire thing. If you don't do that, if you just go through the standard process, maybe you work with your own lawyer and your own accountant, and you just do the per investor fee based on what you raise, we'll still be happy to work very closely with you, make introductions, and to people who can help talk through things. But ultimately, if you're applying to the SEC, you're having a lawyer do it. So that's not really what we do specifically. Even if we covered it, we would be paying a lawyer to do that for you. Okay, can you do Regulation A+ ICO with a portion allocated for US investors and a portion allocated for international investors? No, that doesn't really make sense, because Reg A+, anybody can invest in it. People from pretty much anywhere other than Canada can invest in it. Unfortunately, Canada has a policy against this, but other countries that the US has good relationships with can invest. The purpose of regulating your ICO is so that you can get through the securities laws in the US. So you would probably primarily want to do your Regulation A+ for US investors. And then if there's other security laws in other countries, you can follow their security laws if you want to do it that way. Okay, how do you plan to enforce the resale requirements for Reg D? Our regulated trading systems are going to enforce the resale requirements. So the next question, I understand there is a mandatory 1-year holding period when selling under Regulation B. Yes, the holding period is decided by the issuer, so that's you, and not the regulation. So you can have a holding period if you want to. You don't need to have a holding period. So you're probably thinking of a specific company that chose to do a 1-year holding period. So it's not mandatory. The next question is, when did the regulations come into effect? They are all in effect already. Reg D was in effect by the end of 2013, and Reg A+ came into effect in June of 2015. That was the day that StartEngine launched, alongside the day that that law came into effect, and launched our very first company that day with Ilio Motors. What if you have not been, what if you've not been in business for 2 years? That's fine. So yes, it is a 2-year audit requirement if you've been in business for 2 years. If you haven't been in business for 2 years, then it's going to be anywhere from the time that you started the business until now. So it could be just a couple of months if it's a very new company. The question here, I think you need to address the accredited investors now, as most investors on ICOs now are international. Accredited and international are not mutually exclusive. So accredited international investors can invest. Non-accredited international investors cannot invest. So accreditation is based on how much money a person has, and international is just the country that they're from. Another question here said, I'm curious if StartEngine can help us do a sale outside of the US, and at like an SEC Regulation S, while we're doing the prep for a Reg D or a Reg A plus in the US. So yes, but if you use Reg D, you don't need to use Reg S. So under Reg A plus, you can sell to international investors subject to their own local securities laws. So you wouldn't want to use a Regulation S to sell internationally when you have laws that allow you to sell both internationally and domestically that are available to you. And at the end of the day, you're still going to be beholden to the local security laws of the different countries that people are from. So there really wouldn't be any purpose to do the Reg S. You'd be better off starting with the Reg D while you prepare your Reg A plus. Do you have data on how Test the Waters campaign successes convert to fall through? We do, actually. So with Test the Waters, we've found we haven't done that many Test the Waters campaigns with StartEngine, and one of the reasons is because the process takes a long time and there's a marketing cost associated with testing the waters before actually launching. Now this is a little different though from ICO. So the only data that we have is relating to non-ICOs, and we do see that about 50% of the investors actually follow through. Since we have that data is also based on old technology that didn't take down all the information of the investors. We expect that with the technology we use now, where at the point of making the reservation, the investor is also providing all their banking information, we're going to get a lot fewer people who are just messing around or pretending they're going to invest more than they actually will. People typically don't want to provide you with any kind of payment information if they're not serious about investing or actually giving you their funds. So we are really excited about the Test the Waters process for these ICOs. Can you break down how ICO and Reg A or D are intertwined? Or are you simply suggesting an ICO should self-regulate based on Reg A, D standards and norms? Okay, so it sounds like this question is asking, there's no reference to ICOs under Regulation A or D specifically, but that's because Regulation A and D were created without the ICO phenomena. The first ICO hadn't even launched when Reg A and D were initially passed in the Jobs Act. So we're not suggesting that an ICO should self-regulate. It's a requirement. You have to regulate your sale of securities. That's the law. You don't get the option of not regulating them unless you're willing to risk jail time or if you want to break the law. What we're saying is that Reg A and D are ways that companies can regulate themselves, or that they can comply with SEC regulation standards, and can actually legally sell securities, which is what they're trying to do illegally. So I think that's kind of been the point of the whole presentation, is how Reg A and Reg D can work with ICOs and what that process will look like. Another question is about Howard. Howard Marks is our CEO at StartEngine, and it says, from Howard's interview, it sounds like StartEngine is planning to offer purely security tokens. No. So as I reviewed earlier, you might have gotten here a little late, but you can go back and watch the earlier part of the presentation. We offer security tokens that promise to deliver a utility token and pure security tokens. So there's a lot of time spent on that. Curious to know what options are for voting what are the options for voting features for true security tokens? Oh, so you can just determine that yourself. So the voting rights would be for investors who own the security tokens that allow for voting rights. So in other words, you get to create the terms on your own. So if you want these to be non-voting shares, then they're non-voting. If you want them to be voting, then you're selling voting shares. So those are the options are pretty much, I mean, you can give them all board seats if you want to. It's completely up to you. StartEngine isn't going to require any level of voting. The law does not require any level of voting. Does StartEngine's fee structure change for ICO versus Reg CF, A, or D? It's pretty much the same. The difference is that under Reg A, we take warrants, and under for an ICO, we are taking tokens instead. So otherwise, it's pretty much the same structure. What if we already have your service built? Okay, that's great. You want to go for a utility token. Utility can already be used. Do we need to go through any filing? Okay, so this is a really good question. So you have a utility token, it is usable, you want an ICO, do you need to go through filing? This is going to depend on whether or not your utility token is a security. If there's a limited amount and people are purchasing them with the expectation that there's going to be market demand and the value is going to increase, it's probably a security. But you're going to need to consult with your lawyer to determine whether or not your utility token is a security. And if it is, then yeah, you'll definitely need to go through the filing process, and it will mean that your utility token can only be traded on the regulated trading platforms. Keep that in mind. How will StartEngine assist in bringing these tokens to larger exchanges? Okay, so it's going to be up to the regulated trading platforms to decide if they want to accept security tokens. The larger exchanges within the ICO community already are going to need to become broker-dealers and then apply to become ATS, which I expect at least many of them will. But that's going to be their determination. If we can talk with them about it, but ultimately, if they don't register properly, then they can't accept the security tokens. Okay, so StartEngine becomes a broker-dealer and has registered the ATS. No, StartEngine is not yet a broker-dealer. Right now, we're partnered with CFX, which is a broker-dealer, and they're handling our security sales. So that's the partner that we have right now, CFX. So investors can trade on any registered exchange, not just yours, but also T0. Yes, any regulated trading platform. So T0 is a great example. There's going to be probably a lot more. It's not that difficult to have a registered exchange, so we do expect there's going to be a lot more. Do you make it possible to set a minimum and maximum investment size for each investor? Yes, you get to determine your minimum and maximum. We do have a StartEngine minimum of $100 per investor. You can go any higher than $100. And then under Regulation A+, each investor will individually be limited based on their own net worth or income to either 5 or 10% of that net worth or income. But that doesn't mean that you can't also set your own maximum investment. So somebody who had an extraordinary, very high maximum on their own individual investment opportunity, you could still set a maximum and they would have to stay under it. And then for some other people, they may not be able to invest up to your maximum. They would be investing up to their own individual maximum. Are these fees pulled from the financial? Okay, so the fees that come to StartEngine, yes, they are pulled from the investment amount. So as you take funds from escrow, we take funds from escrow too. Another good question here is, what precisely do you mean by the token, the equivalent $200 in the security token issue? Do you mean $200 per token? Oh, yes, we mean a payment of $200 in tokens total. So it's a payment, so it's whatever your token, whatever amount of your tokens is valued at $200, that's how many tokens we will take. When do the ICO platform offerings open up on StartEngine. So Test the Waters is already available. As I said, by November 10th, we're expecting to have a bunch of pitches at our summit. The ICO is going to be live as soon as we've got companies that have gone through the whole process and been approved by the SEC. If a token is exchanged for Bitcoin, how is the value of the token set? This would be completely decided by the company. So you would be determining the value of your token. How does an ICO specifically benefit a company over a more traditional OPO share of sales? Well, the ICO, for those of you, okay, so there's a cryptocurrency market valued at over $150 billion. So if you decide to do an ICO instead of a traditional OPO, you're getting more access to that cryptocurrency market. As far as how your company structurally benefits, it would be very similar. You mentioned doing a Regulation D followed by a Regulation A+. Is there any sort of waiting period? No, there is no waiting period between Regulation D and Reg A+. As soon as you're qualified for Reg A+, you can go ahead and do it. And you can actually do a Reg D at the same time, but there's really no need to. Okay, so if we do a Regulation D followed by a Regulation A+, does that mean we'll now have two classes of tokens, one which can be only held by accredited investors and one which is available retail? Yes, that's a really, really good question. If you do a Reg D, those shares or tokens will only be held by accredited investors. If you do a Reg A+, those tokens will only be held by, or will be available to be held by anybody, as long as they can legally hold them because they pass the anti-money laundering check. Will StartEngine check the maximum investment size, 5% or 10% of net worth for Reg A+ investors, or is that the investor's responsibility, not ours? So we check the maximum investment size over $2,000. For every investment that's under $2,000, we actually don't need to do that because everyone can invest up to $2,000. But over $2,000, we do that review, yes. The investors are providing their information to us. Will we be taking our fees in coin? Yes. So 50% of the fee is going to be in cash and 50% of the fee will be in coin. In your compensation terms on the registration page of StartEngine, it says you charge 5% of the ICO. Is this correct? What do you offer for this? Actually, I don't think that is correct. I'm not sure where that is. We don't take any percentage of ICOs, so I apologize for that. I think that might have been in reference to another type of raise. We do take percentages under another raise we do called Reg CF, or small OPO. So it looks like I don't think I have any more questions here. Really appreciate everybody for being here. Thank you all for your time. Again, I've left this up. Contact me if you'd like to sign up for our summit, or if you have any other questions about your ICOs. I'm happy to send over the posting agreements. And if you're curious about the creation process, definitely create an account on StartEngine. It's easy. All it requires is your email address, and you can click Raise Capital to get started with the building of a campaign page. Again, I'm Kinsey Cronin, Director of Business Development here at StartEngine. Really, really glad to have you all here, and thank you for your attendance.